Well, hello everyone, and welcome to SIX's live summit today titled The Rise of Generation Investor. I'm pleased to introduce our CEO of SIX, Daniel Barankin. Daniel will take us through a presentation, and then as always, we will open the floor up for a live Q&A session. So as a reminder, you can submit your questions at any time on the right-hand side of the screen, and we will get to them after the presentation. And as always, the summit is being recorded and will be available to watch afterwards on six.com. But without any further ado, I'll hand it over to you, Daniel, to get us started.
Thanks so much, Dasha. The presentation today is titled The Rise of Generation Investor. And in particular, what I'm going to be looking at are the growing trends of what we know about millennials and Gen Z in particular, and looking at what the future of capital markets and the future of the investment community might look like as this generation continues to invest and becomes more active in the financial community. And so before I get into the presentation, let's start by way of quick definitions. Really, when we're talking about the next generation of investors, we're talking about two main cohorts of people. We're talking about millennials from 1981 to 1996. And what's interesting about this cohort of people is largely they had their childhood without the internet for many folks. However, they've had their adolescence be fully digital. And so they're very, very fluent in using internet tools and internet technologies. Gen Z, on the other hand, is completely digitally native, to the point where they're very, very young in their childhood all the way through to adolescence and into adulthood, remarkably fluent using digital technologies. The reason that these two groups are so important as a cohort when we talk about looking at the financial landscape and the investing landscape is that over the next 30 years, they're set to inherit more than $30 trillion of assets. That's a remarkable sum of capital, and it's a remarkable sum of investing and purchasing power. To put this in comparison, the M3 money supply is about $22 trillion of capital. And so when we're looking at the purchasing and investing power of millennials, which is only one subset of the next generation of investors, we're looking at a significant ability to shape capital allocations and in turn, the companies that are able to attract that capital and subsequently build the future by using that capital. What's really interesting is that millennials and Gen Z investors who are benefiting from a massive wealth transfer, that 70% of them, in fact, intend to fire their family's financial advisor. That's going to have significant ripple effects because it means that, well, if the financial advisor of the family is no longer the one that's making investment decisions, who is going to take the place? Who is going to instead allocate the flow of capital and decide where that capital flows into? What's really interesting is that we can start looking at where we think this capital will go based on the existing patterns of what younger investors are already doing. We know, for instance, that young investors are already 4 times more likely to invest in ESG, green, and impact funds than older people. This makes sense when 1/4 of young investors say that climate change is seen as the biggest threat to their wealth. What's also really interesting is that more than climate change, 61%, or about half of all young investors, are very concerned about inflation. And so the question becomes, where will capital flow by Gen Z investors and by millennial investors? And what we can see is that today the young investors that are participating in the capital markets are largely investing primarily in stocks, primarily in equities. And what's more is that they're using a combination of growth and they're looking at specifically at growth in dividend stocks in particular. Interestingly, young investors, especially those 18 to 24, only recently begun investing in the stock market. And so many investors that are on the younger generation are very, very new to investing. What's interesting is that they're getting their research primarily as a function of online communities. In fact, 6 out of 10 young investors are active in some form of online community. What's more is that both Gen Z and millennials have used social media as a source of investing information in the past month. And 22% of young investors trade stocks at least once a week. What does this mean? It means that we have a context where there's a large cohort of new, digitally savvy investors worth more than $30 trillion. They conduct their own due diligence. They invest collaboratively online. And they're primarily invested in individual companies embracing risk in the pursuit of high returns. We're already seeing this on our own platform on six.com, where hundreds of thousands of investors, many of those young investors, are conducting their own research and using SIX as a tool to go and discover investment opportunities and as a point of research. Similarly, we're seeing that companies are increasingly using online channels, including Six.com, to connect directly with investors in real time and providing a forum where they can collaborate and have conversations openly. And so to that end, that's my presentation on the rise of Generation Investor. If you'd like to continue the conversation, please join me on Twitter or through this online forum where you can ask questions, or we can continue the conversation here. Thanks so much.
Great, thank you so much, Daniel. So if anyone does have any questions, feel free to submit them now. But Daniel, where are young investors going online for investment advice and financial guidance?
So there's a lot of channels right now for conversations to emerge online. We're seeing, for instance, in the crypto space that Discord, which is primarily and originally a gaming server, is attracting a remarkable crowd of young investors. We're looking at hundreds, thousands, tens of thousands of individuals who are in a live chat environment talking to each other, in particular on cryptocurrencies. We're seeing similarly many groups on Facebook emerge. Many of these groups are more oriented around stocks or usually particular themes of stocks. We're seeing the conversation on Twitter where anyone is able to participate. And so increasingly, if you use cash tags, you can see conversations. Usually, however, a lot of these conversations are about larger companies or larger net worth cryptocurrencies. And so there's a very interesting spectrum where these conversations are happening online, but generally the context of these conversations to emerge is among very large companies or very large market cap opportunities. What that means is that there is a dearth of opportunities, especially for nano cap and micro cap companies, to have those conversations facilitated.
Great, thank you. And how can newly listed companies attract the attention of young investors?
One aspect is definitely on the mission side and making it really clear what that company stands for and being clear around how it's going to improve the world. Increasingly, young investors are looking to be behind companies for very long periods of time, which I think is in fact in contrast to a lot of the common thinking around investors, younger investors. Even though in that younger investors are certainly making and actively trading stocks and securities on an active basis, they do take long positions in particular companies, and they hold on to those positions for a very long time and integrate it as a core part of their identity, whether that's Tesla, whether it's investing in cryptocurrencies like Bitcoin or Ethereum. So that's part of who they are. And so to that end, that's a core aspect.
Right, thank you. And from what you've observed, has the pandemic had any impact on young investors' risk tolerance?
Oh, absolutely. I think that over the last 3 years, the stock market has been absolutely spectacular in the sorts of returns that it's been able to produce. To that end, many young investors have started paying attention and joining the stock market. Equally spectacular has been the cryptocurrency market, where the kinds of returns that investors that participate in that have gone into have been just absolutely incredible. Many of their friends have made money, and to that extent, many young investors have made money in that space. And what's really been interesting is that the level of volatility, both in the stock market as well as in the cryptocurrency market, has become normalized, especially among those investors that have come in very recently, where they understand that volatility is a core part of their investing strategy that they need to make allocations for. And so to that end, we're seeing among the most high risk, high reward type investors among these two generations of Gen Z and millennials, due to the unique circumstances that we're seeing here in the stock market and in the cryptocurrency market.
Thank you. We have a question here. A lot of young investors utilize leverage, such as debt, to invest. In your opinion, is this a good thing or a bad thing?
It's a very dangerous thing. A lot of young investors that use leverage aren't fully informed around exactly how that works. And to that end, they aren't fully aware of the potential risk that's allocated to using leverage. And so in particular, there could be remarkable blowouts. Looking, for instance, at even last week, where the volatility of for various stocks and various cryptocurrencies has been absolutely massive. Even though a lot of that has recovered, there's been many young investors that have been caught by that as a result of using leverage and then experiencing a margin call or an equivalent. And so to that end, it's a tool that's very actively used. What's interesting is that increasingly within online communities, there's open conversations about this and there's education about this. And so investors are becoming more knowledgeable and aware of these risks.
Great, thank you. We have a question here from Peter. He's asking, what sort of appetite do young investors have for the precious metals and mining stocks, especially given their concerns for inflation?
One of the most interesting things that I've had the privilege of doing since I'm at the intersection of the metals and mining sector, and I know many of my friends are millennials or Gen Z, is the reality is that most young investors neither like nor dislike the metals and mining sector. They simply don't think about it. And what's really interesting is that in the conversations that I've had with individuals where I talk about the junior mining sector and I explain the Lassonde curve and I explain how gold and silver work as an inflation hedge, such as, for instance, by inviting some of my colleagues and friends to invite our panel yesterday, there's a remarkable appetite where the thesis around Bitcoin, for instance, and Ethereum, especially around inflation as a store of wealth, resonates even more strongly when looking at things like gold or commodities because it's something that's tangible and material. I think contrary to what a lot of kind of mainstream media presents, many young investors are not fully confident or secure in the cryptocurrency space. And the more they learn about it, the more complicated it is. And that's not to say that the cryptocurrency space is better or worse than the metals and mining sector. It's to say that investors, especially young investors, are hungry for knowledge. And today, the cryptocurrency space does a very good job providing and feeding that appetite through information, through community sharing, and through knowledge sharing. And to the extent that investors, especially young investors, have participated here on Six.com, for instance, where we have a lot of metals and mining companies and stories and ideas shared, they get very, very interested and very, very motivated to the point where I've seen many young investors actively participate in the metals and mining sector. And it's really quite nice to see.
That's great. Thank you. Our next question is, beyond equity, where do you think these young investors put their money in?
Many young investors, their primary reason for investing is to have a house. What they want is to own real estate. And so their financial goals for many young investors is primarily around making their first house purchase. And so a lot of their thinking around where to put their and allocate their capital is around what is my timeline for buying a house? And to that end, what can I do to safeguard and ideally grow my wealth in a significant way so that my lifestyle when I purchase a house meets what I'm aiming at? And so to that end, we've seen a lot of investments in the cryptocurrency space, in part because how generally easy and accessible it is for younger investors who don't have very many assets or very much capital immediately to allocate to it, to get into it. On the equity side as well, for individual companies, we're seeing a lot of investments there. As mentioned earlier, with options and puts and leverage bets, many investors are relying on these means, primarily because in pursuing their goal of a house, for instance, or purchasing real estate, they need significant upside potential. And so to that end, they're willing to embrace and take on significant risk in pursuit of it.
Got it. Thank you. We have a question. What do you think is the reason that meme stocks continue to be so popular? And do you think that they will ever fade away?
So I guess there's two parts to that question. So I'll try to answer both of them fully. The first aspect of why meme stocks are popular is that it's something that unifies the community. Many young investors don't have significant allocations of capital to invest with, certainly when they're beginning. So for instance, among that cohort of 18 to 24-year-olds, investors, almost 70% of them began at the time of that research in the last 6 months. That's a very recent entry point into the capital markets. And so what's interesting about meme stocks is that they tend to, because of how they circulate, they get on the radar of young investors. There's more than 50,000 public company securities that are registered with the World Federation of Exchanges. What that means is that investors that are looking for investment opportunities have to figure out, which one do I want to invest in? And so to that end, what meme stocks do remarkably well is that they have that name recognition where it gets on the radar of a young investor. The young investor begins researching it. And in the process, ironically, of conducting that research, they become more knowledgeable about that particular company than any other 49,999 companies that they haven't yet researched. What's more is that because there's an online conversation and community, there's more of an accessibility where, as a young investor, if I have questions about a meme stock and you post that question online, the likelihood of getting a response, especially a really well thought out one that seems to resonate and make sense, that's well researched, is much greater than if as a young investor, asking a question about a company that is far less covered. The other aspect is that young investors in particular don't have the traditional modes of research, for instance, like being able to discover analyst reports or having access or subscription to those analyst reports. They don't have, to a great extent, the infrastructure around how to conduct their own due diligence. And so with meme stocks in particular, a lot of that is discovered inbound, where it's the investor and the young investor who's on their Twitter or on Reddit, and it comes to them, which makes their discovery process much, much easier. What's notable is that many young investors who end up investing in meme stocks also look at other non-meme stocks. And in fact, most young investors, I think there's a stat on this that I can share a bit later, but most young investors aren't genuinely in favor of meme stocks in the sense that it's not their number one investment choice. Instead, it's something that you can more easily share and kind of wave as a flag and then spark a broader conversation among friends and peers about investing more generally. And I'll throw it back to you, Dasha, if you could reiterate the second part of that question.
Yeah, the second part is, do you think they'll ever fade away?
I think that very likely they will not. Meme stocks, what's really interesting about memes as a form of culture is that the way memes work is that it takes one aspect of an idea and it usually satirizes it or distorts it in some critical, meaningful way that makes it funny or makes it memorable. And then you scale that idea. And what's really powerful about memes in particular is the ability of remixing the idea. So for instance, someone goes and presents one idea and someone can change the meme idea in such a way that either the original idea is preserved, but there's a new nuance to it, or the original idea becomes some caricature of itself that becomes notable and interesting, that's worth sharing and worth being engaging with. And so what's interesting is that memes on the internet is remarkable. Memes as a standalone concept on the internet, where you're sharing these ideas and sharing laughter and sharing culture, is already very, very popular. And so to the extent that memes will be around, and I do believe that they'll be around for a very long time, it's a new medium of expression. I think stocks that naturally give themselves to memes are going to do very, very well. On Reddit, for instance, if you look at the Silver Squeeze, or if you look at GameStop, or if you look at AMC, or if you look at Bitcoin, for those that might view that as a meme stock equivalent as well, what's really interesting is that these ideas tend to get very strong communities of support. And then what happens is that as people aggregate to these communities of support, they're able to then discover new related ideas. And that's where a lot of the discovery process for young investors happens.
Great, thank you so much. We have a question. Do young investor cohorts require a different promotional strategy than older investors?
Yes and no. There's a few aspects that I'd highlight here. There's a famous thinker in Canada named Marshall McLuhan, where he talks about the medium as the message. And so, yes, in the sense that young investors are not at the conferences, they're not at the Minds and Money shows to a great extent. They're not at, the various physical locations where investors congregate for road shows or conferences or things of that sort. And so to the extent that promotional strategies are oriented around those sorts of approaches, because the young investor, on average, from a proportional basis or even a kind of scaled basis of how many young investors there are, because they're simply not there, doing better marketing in those environments won't necessarily increase exposure to young investors, even if, for instance, if you imagine a booth that's all memes and you're trying to make yourself into a meme stock, and at a physical convention floor you have all of that, young investors aren't going to discover it because they're not there. On the other hand, the considerations that many older investors have, where they're more seasoned and they are looking at opportunities for risk and reward, and they're measuring that, these are the same considerations that young investors have. What's really interesting is that many young investors follow much older investors in the space. And a lot of the older investors in the space, such as Pomp, for instance, or for others. So what's interesting is that as these investors share their ideas, what emerges is a very strong following and conversation and dialogue around this. And so to that end, there needs to be an adjustment in the promotional strategy and the point of where that conversation happens. The second aspect then becomes, well, if these conversations need to happen online, what are the formatting transformations that happen here? And so, for instance, on Twitter or on CEO.ca or on Reddit or on Yahoo Finance, or on Six, for instance, all of these have their own unique formats for how conversations emerge. For instance, on 6.com, what we have is a video-first based social network where you have live interactive experiences. The sort of content that you would produce to have a really great virtual investment summit on 6 would look materially different than the sort of content to be publishing on Twitter, where it's much more about short form content. Similarly, that conversation still would look different than any sort of dialogues or conversations happening on Yahoo Finance. The other aspect is the considerations around compliance. There are various considerations here about what can be said and what can't be said. And so the recommendation that we make is say things in the context where the lowest common denominator of investor can hear it. So primarily give consideration that these individuals are by and large to be thought of as non-accredited. By and large, they're to be thought of as very entry level into the conversation. And then as you have more and more rapport and understanding and knowledge sharing occur, that's when you can then have more technical discussions. What's also interesting, and I'll highlight this final point, is that because young investors are very new to the markets more broadly, and because, in a real sense, everyone is new to metals and mining, even older investors in the sense of folks who have not invested in the space before, the on-ramp of what it means to understand this sector becomes much more significant. So for instance, the other day on LinkedIn, I saw Lobo Tigre, and he published a fantastic article looking at how to interpret a mining press release. This is the sort of content that's going to go a very long way, both with young investors as well as individuals that are new to the metals and mining sector, because it provides a map for understanding the context of everything that's come up until the point where they have now, for the first time ever, begun looking at the sector as a source of potential opportunity.
Absolutely, yeah. Our next question here is, do you think that the late January Reddit silver squeeze had a lasting impact on exposing and interesting young investors to the world of silver investing?
Oh, absolutely. I think that generally speaking, this has now entered into the cultural conversation. There are a lot of individuals that are talking about silver, that are talking about gold. Right now, what's really unique, I think, about the cultural dialogue is that most young investors that believe in the inflation thesis are primarily drawn to the crypto space. And I was in Miami for Decentral, which is a crypto NFT conference. And I spoke to many young investors. And what was really interesting was the thinking around that space of many of these investors where there are maximalists on the crypto space. There is two common phrases that's often used, which is we're all going to make it, or they're not going to make it. And what it does is it creates a sense of a community where there's a very clear us and them. And what's really interesting is that the crypto community in particular is not by any means homogenous. There are individuals that very strongly believe in Bitcoin, and they believe in Bitcoin at the exclusion of everything else. They think that Bitcoin is the only thing and everything else is false. Others take more of a multidisciplinary approach where they say, you know what? We also like Bitcoin, but there is room for other things. There are things Bitcoin can't do. And what's really interesting is that as that debate is happening within the crypto space, there's a natural exclusion of everything else. So you'll have, it's crypto only. We don't want gold. We don't want silver. We don't want Ethereum. We don't want NFTs. We don't want anything else. We just want Bitcoin. You then have a second group where it's Bitcoin is great, but we also want NFTs. We also want Ethereum. We also want these other cryptocurrencies. But we're not as interested in gold and silver and copper and commodities. What's interesting is that all of these groups of people are naturally aligned to the general thesis of government spending is dangerous, wealth preservation is important, and there's a massive wealth transfer that's going to emerge as inflation and other forces result in a changing paradigm of how the world is structured and governed, including its monetary structure. And therefore, there's opportunity. And all of that resonates very, very powerfully with gold, with silver, with uranium, and so forth. And so I think that over the next few years, we're going to see a unification of these groups. And what's interesting is, contrary to, I think, the view that many have, which is that they are anti-ethical, the fact that there is a very active and public antagony between these groups, in my view, is a very, very good thing, because it means that the conversation and the dialogue already exists. And the merger and unification of it is going to be absolutely massive as it gains widespread adoption. As folks realize that gold Peter had a fantastic post on his Twitter the other day. Gold is the most decentralized asset in the world. And so I think that as these sorts of ideas are shared and exchanged, it becomes very difficult to go and exclude gold, silver, uranium, copper, commodities, and so forth more broadly from the conversation, given that it follows a very similar thesis around supply and demand.
Well, thank you so much, Daniel, for taking us through the presentation and the Q&A. And thank you so much for everyone who joined and asked all these great questions. I certainly learned a lot, so I hope you did as well. I just encourage everyone to stay tuned for upcoming SIX events, and thank you for attending this one. You can also find more information at the SIX's website, www.six.com. And I'll just pass it back to you, Daniel, if you have any final remarks.
Yeah, so thank you everyone for participating and joining. If there are any other presentations that you'd like me to put together, please let me know. I'm a big believer of building in public and sharing everything that we do. So to that end, we had some great presentations yesterday on the inflation panel. The day before that, we had our product launch event. Please attend all of these events. And to the extent that there's anything that you specifically want me to cover, please send me a message. I'll be sure to build something around it.